Welcome to the Taxing Subjects Podcast. I'm Ryan Norton, and today we're going to talk about QBI, the Qualified Business Income Deduction. Now, that comes from the Tax Cuts and Jobs Act of 2017, and people who know about the Tax Cuts and Jobs Act probably know about the big ticket items, right? The new tax brackets, the 21% corporate tax rate, but that Section 199 Cap A Qualified Business Income Deduction may not be something that they've heard about. Or if they have, maybe they're not sure what it is. So to help kind of shed some light on QBI, we've invited to the show, once again, Drake Software Education Tax Team Lead, Amanda Watson. Welcome to the show, Amanda.
Thanks, Ryan. I'm happy to be here.
It is wonderful to have you back. And I think we're going to give you some frequent flyer miles for when you show up over here. We have her on a lot, and it's because she gives us good information.
Okay, I was thinking about I needed a punch card.
You know, I have one of those. I'll just give you the punch card after the show.
Okay.
Yeah. But we do have a lot of information to cover today. And so what we're going to do is we're just going to jump into it. And we're just going to have you start off, can you just briefly explain QBI for people who might not know what it is at all?
Okay, well, I'm going to give you a high-level overview here, and we're not going to get into a lot of the details, but the QBI, or the Qualified Business Income Deduction, is new for this tax season. We're in the tax year 2018, and it's a 20% deduction for individuals who have income from a qualified trade or business, and it also applies to trust and estates, but for today, I'm really just going to talk about the 1040 side of things.
Okay. Now, you mentioned trades and businesses. What does constitute, like, say, a qualified trade or business for QBI? And could you give us some examples?
Okay, well, that's a good question, Ryan, and that's a question a lot of people had last year during our education roundup. A trade or business is defined in Section 199A by the Internal Revenue Section 162, and the IRS has deemed that an appropriate definition of a trade or business. And the IRS has some guidance there that one could go by to determine if an activity is indeed a trade or business. They include things like the facts and circumstances. Is there a profit motive? Not necessarily is there a profit, but is there an intention for profit? Right. So there is some due diligence there that is required, but some examples of income generating activities, an 1120S could generate QBI, and the qualified business income would be determined at the entity level for that, as well as a partnership reported on a 1065. Sole proprietors reported on a Schedule C, that is usually QBI, or qualified business income, rentals, farming, those types of businesses. There
was some confusion when we had on Bob and Elena previously.
They are experts.
They're wonderful. But when we had them on, there had not been guidance issued specific to all aspects of rental income. They only had a specific subsection of that. And so I think at the beginning of the year, maybe they issued some guidance. So could you kind of walk us through what the IRS said in January?
Okay, well, you're right, Ryan. There was a lot of confusion, and that was one of our number one questions during update school last year. And we said yes, that it did qualify, and there were some people who said no, and there wasn't a lot of explicit explanation in the proposed regs. But as you said, in January, the IRS released the final regs for QBI, and they reiterated that if a trade or business, including a rental, rises to the level of a Section 162 trade or business, that they qualify for QBI. Rentals too. They gave a little bit more guidance, and they had to be involved in the activity. There had to be a motive for a profit, and perhaps issue 1099s would be one of the tests for that.
Okay. Yeah.
But they also issued a safe harbor, which a lot of people welcome because it was very black and white.
Yeah.
And, I think people in this industry really like black or white, and the gray areas where things tend to go off the rails. But the safe harbor, basically, there's some test, but if someone spends 250 hours a year, along with some other guidelines, they could just qualify for safe harbor to indeed take a QBI deduction on rental income.
That's handy information for people who maybe have clients or even maybe themselves on the side have some rental income coming in. So.
Right. And it's a great deduction that's very helpful to a lot of people who do have rental income. Just make sure they would either elect the safe harbor or go the Section 162 route.
So we've talked about some of the things that are included. What are maybe some limitations, say, with respect to types of businesses or maybe types of income that would try to qualify for QBI but might not rise to the level of actually meeting any kind of tests for to qualify for the deduction?
Okay. Well, there's some types of income that are explicitly excluded from qualified business income or QBI. And that's, of course, any kind of income that's investment related. Capital gains, losses, interest, dividends, guaranteed payments to partners can never be considered QBI. And there's some more. But generally, if it's an investment related income, it is not considered to be QBI.
So we've talked about what does qualify, but what are maybe some limitations on either, like, say, the types of businesses or even the types of income that would qualify for QBI?
Okay, well, that's a great question. Again, the qualified business income is through a pass-through entity, but investment-related income is excluded from QBI. Things like capital gains, dividends, interest income, and one thing to remember is guaranteed payments made to partners is never considered to be QBI, or, right, of course, employee compensation.
But what about maybe specified service trades or businesses? Is there something about that in QBI?
Yes, there is something about that, and there was a lot of confusion around that initially. Initially, people thought that if a business was deemed to be a specialized service trade or business, also known as an SSTB, that they weren't allowed a QBI deduction at all, and that's not the case. They are allowed up to a certain threshold, and then after that, the deduction is phased out. And I think that the numbers are, it's $315,000 taxable income for married filing joint. If it's a single or married filing separately, it starts at $157,500.
Okay.
So after those thresholds, the QBI deduction for specialized service trader businesses begin to phase out. But below the threshold, it's the same as anyone else, the 20% generally.
Well, speaking of phase outs and just calculations in general, how is QBI calculated? So I'm going to sit down and look at this. How am I going to calculate QBI?
You're going to probably use your tax software to do that. It can be a complex calculation if you've met some of these thresholds I mentioned earlier. But if you're below that, it's really just 20% of the qualified business income or 20% of the excess of an individual's taxable income over an individual's net gain. But once you hit those bottom threshold amounts, even if you're not a specified service trader business, there's going to be some kind of phase out for a limitation. So it can get pretty complex from that point forward, and things like W-2 wages paid or the unadjusted basis after acquisition of assets, or the UBIA, those things are considered, and that is an incredibly complex calculation that hopefully people rely upon their tax software to do. But I mean, of course, everyone should understand it, but right, it is a pretty complex calculation.
What tax forms and worksheets? So you mentioned individual, so probably 1040, right, but what are maybe some forms and worksheets that I would need to worry about if I'm going to try to claim this?
Okay, if you're an individual who has a qualified business income, it would be flowing to your tax return from somewhere else. If it were from a 1120S or a partnership, a 1065, that taxpayer would receive a K-1. And depending on who prepared the K-1, they should pass through all of the qualified business income. And if they've used Drake, we have some wonderful worksheets that break that down, and they're just really helpful. And so they would need that K-1. And if they have a Schedule C, that's really what they'd have, is the Schedule C income, and it's just computed right there on the 1040.
That's pretty great.
Right.
we've probably talked around the answer to this question a little bit, but why have people found QBI so confusing?
You're Ryan, that's a great question because it has been incredibly confusing. And the first reason that it's confusing is it's new.
Mm-hmm.
And anytime something new is introduced in the industry, it's everyone has to wrap their head around it. And this was introduced in the Tax Cuts and Jobs Act in December of 2017. And then the IRS released some proposed regs last summer. And people took those proposed regs and tried to decipher them. And then the thing is that the final regs were not issued until January. And that is pretty tough. That was amidst a government shutdown and things like that. And it really kind of put people a little behind. The tax software companies like Drake, we were scrambling to implement that final regs in January. So a lot of people are already in the throes of tax season before the final regs were released. So they probably haven't had the time to really dedicate to the education. So it's a good opportunity for that this summer.
So if I'm somebody who wants to learn more, what are some resources that I could look into to kind of familiarize myself with QBI? I know, like you said, we're just kind of doing a high level,
Right.
broad strokes. But if I want to drill down on the information, where can I go to find that?
Well, of course, you could read the law, but that's not very friendly. But Drake has some great resources to help our customers. One of those is our Drake Software Knowledge Base, and that really helps people learn how to implement the QBI calculation in Drake and how to know what worksheets to expect. And once you see it flowing through a return and those worksheets break it down, it really makes a lot of sense. We also offer a lot of on-screen help. So if you're on a screen and you're confused in the QBI section of Schedule F, for example, you can just view the field level help and it can tell you exactly what's expected. We also have some great tutorial videos to walk you through how to enter QBI and Drake. And always look for new training at drakecpe.com. Drake CPE is a website. It is a Drake website where you can learn tax education exclusively.
And that, I'm guessing, offers CPE at the same time.
Well, Brian, yes, it does. Drake CPE. It is a good place to earn CPE while learning tax education.
Well, Amanda, that's great. Is there anything else that you want to say about QBI before we sign off for the day?
I want to tell you that we have some very smart people who have spent time in Washington with leaders in the IRS that have worked very hard to implement QBI and Drake tax. And I think that we have a team that has done a fantastic job with the implementation. And I'm just really proud of that and how it works in Drake. And I think we have some really great worksheets and some great resources to help people explain that to their customers. So
great.
That's my take.
You can get the help you need. Maybe earn some CPE along the way.
Absolutely.
And help out your clients.
Yes.
All right. Well, Amanda, thank you once again for showing up and being here and talking about tax with us. It's been a lot of fun. So
it's always fun, Ryan.
That'll be it for today. We'll see you all on the next Taxing Subjects podcast.